welcome to the XUCPA channel. My name is Charlene. Today I'll be sharing with you, if you own a business, what kind of tax return you need to file. You know, every tax season, our CPA firm files many business tax returns for many business owners, and if you are just starting a business, you might be wondering what type of business tax return you should file. What is a business tax return? So if you want to find out more, please stay tuned. So I will be explaining to you a different type of structure. For example, if you are a videographer and you perform projects for your customers, you will be considered a sole proprietorship. So as a sole proprietorship, you'll be filing a Schedule C, and that is part of your 1040 personal tax return. For this year, it is going to be due April 18, but normally the deadline is April 15. Now, if you are running a business with another business partner, most likely you will be filing a partnership tax return. A partnership tax return is 1065, which is due March 15. Similarly for S corporation tax return. Now, what is an S corporation? You know, you have applied for an S election status for your company. Now, you can be a corporation or you can be a multi-member LLC or single-member LLC. If you have an S election, you'll be filing an 1120S, which will be due March 15. Now, if you are running your business as a corporation, then most likely you will be filing 1120, and 1120 is going to be due on April the 15th. So I get these questions a lot. Now it depends. If you are a Schedule C filer, meaning if you are a sole proprietor or you are a single member LLC, then most likely you are required to report your business income and expenses on a form called Schedule C, which is part of your 1040 personal tax return. Now, if you run your business as an S corporation or as a partnership, what you would need to do is that there will be a K1 issued to you, under your social, and that K1 you have to report on your Schedule E when you file your tax return. So the only time that you do not need to report your business income activities is if you are a C corporation. It's a separate entity, so you would not need to report C corporation activities on your personal tax return. So if you run a business, most likely you would have a limited liability company for asset protection and risk management purposes. Now, if you own 100% of your LLC, then most likely you are treated as a disregarded entity to where you had to file a Schedule C as part of your personal tax return. Now, if you have other business partners, then what happens is that you will be required to file a partnership tax return, and if you elect to be taxed as an S corporation, you will have to file an S corporation tax return. So we get these questions a lot. You just started your business 6 months ago, you purchased a lot of equipment, and most likely you are not having any profit because you are still trying to build your customer database. And in that scenario, we strongly recommend that you still file your tax return and report your expenses and your losses, because those losses could be utilized to offset your other income sources or your future income that you will generate from your business. Thank you so much for watching today. We put in a lot of efforts in building all these videos, so if you'd like to support us and support the channel, please like, share, and subscribe, and hit the bell notification. We will appreciate it very much. We understand that as a business owner, you wear many hats, and tax filing is the one last thing that you want to worry about in making sure that your business is successful. So if you ever need help, if you have questions, comments, please reach out to us. We would love to help you. We will see you next time. Thank you. Goodbye.